We obviously meet in the midst of a deep financial and economic crisis with a focus on some longer-run issues, but issues that relate directly to what is going on now in the markets, in the policy discussions, and in the efforts to restore confidence and improve the prospects for the world economy and financial system. We're delighted to have this session in the midst of all this, and of course here in the opening of a big weekend of meetings here in Washington, with the G7 ministers meeting later today and maybe beyond that, and then the IMF meetings over the weekend. This conference is on the euro at 10, which obviously raises the broader issues of the role of Europe in the world economy, how the crisis will affect what's going on in Europe. Will it drive Europe together or apart, if one wants to sensationalize the question? And I'm therefore very pleased that we have the top leadership of the European Union and Euroland itself with us to lead off this session. We at the Peterson Institute for International Economics are co-hosting this conference with our very close friends and colleagues from Bruegel. Joan Pisani-Ferry and Adam Posen, my deputy, have organized the event, and I want to thank them right at the start for doing that. We could only do so, however, with very strong support from the European Commission. We've worked with them considerably throughout the history of the euro. We had a major conference on the euro at 5 back in 1994, and we deeply appreciate the support and encouragement from the Commission and its active engagement in what we do. I think it's fair to say that today's topic, the international role of the euro, what it's achieved so far and where it's going, those questions are all pivotal to the immediate issue of the world financial difficulties and the economic outlook. And so it is with great pleasure that I begin the conference by introducing the top leadership of Europe as we go into this discussion today. Our leadoff speaker, quite appropriately, is Jean-Claude Juncker, who is, of course, the Prime Minister and Minister of Finance of his own country, Luxembourg, and also, and that's in a way the role he brings today, is as the first and continuing permanent president of the Euro Group, which of course brings together the ministers of finance of the Eurozone member countries, and Prime Minister Juncker is indeed their spokesman and voice to the world on the whole range of issues that are so critical at this point. Jean-Claude Juncker became Minister of Finance in Luxembourg almost 20 years ago. He was a principal architect of the Maastricht Treaty. He became Prime Minister in 1995 and has been reappointed to that position twice since that time, and then in 2005 became the first permanent president of the Euro Group. He's played a key role in reforming the Stability and Growth Pact, in the effort to implement the Lisbon strategy in Europe. I think at this point in time we could have no possible better leadoff speaker than Prime Minister Juncker. Welcome, and thank you for being with us.
Ladies and gentlemen, we are living in interesting times, and that's the only positive message I have for this morning. The second is that it is a distinct pleasure indeed to deliver the opening address at the joint Peterson Institute and Bruegel conference on EMU at 10 today. I have to admit that this is not my preferred time of the day. You said that I'm the spokesman of the Eurogroup. This morning I was the listening man, because I had President Sarkozy, President Trichet, President Barroso, and I don't know for what kind of reasons that they did forget that I was in another sphere they are in, and so they were not really exciting but animating my night. This is not my preferred time of the day, but as a long-standing member of the European Council and President of the Eurogroup, my colleagues and I have acquired a reputation for concluding late-night deals in smoke-filled rooms in an obscure place called Brussels. So I hope that you will appreciate my out-of-character early morning appearance at your conference. The title that you have given to your conference, the Euro at 10, the next Global Council, provokes in me three types of intuitive reactions: hope, challenge, and doubt. Hope, because despite the profound turmoil that the world financial system is currently experiencing, it suggests that the market-based economy, in one way or another, will eventually prevail, and the next Global Council will not be sticks and stones for barter. Challenge, because it suggests that the euro has the potential to be the next global currency, but that it is not quite there yet. And doubt, because you put the title down with a question mark. I'm confident that many of the eminent speakers that will take the floor after me, notably my dear friend Joaquín Almunia, that one, will dispel those doubts and convince you that the euro is not only living up to our collective expectations, but also to its global responsibilities in a rapidly changing and demanding international environment. The current crisis in financial markets is representing a genuine test for the euro area, for both its coherence and its cohesion. I'm indeed deeply preoccupied by the unprecedented tensions in financial markets and their longer-term implications for economic growth, employment, and the general well-being of our populations. However, I firmly believe that so far the euro area authorities have reacted in a timely manner and delivered the appropriate policy response. At the macroeconomic level, we have heeded Milton Friedman's precious advice and lend each other peer support in order to avoid big mistakes. Thus, we did not repeat the policy errors that we made in the 70s in particular difficult circumstances, and the carefully crafted political consensus for a policy framework based on rules and a bit of discretion remains intact. I acknowledge that not everybody recognizes the benefits of this approach, but future generations will. But we have done more than just avoided big mistakes. With respect to the financial crisis, the European Central Bank has fully assumed its responsibilities from day one onwards. Its decided interventions to supply financial institutions with ample liquidity to contribute to stabilize the financial system have been both courageous and effective. Furthermore, the ECB has done its job in a way what 15 or 16 national central banks would have been strictly unable to do. As the financial crisis spilled over into Europe and contaminated our highly integrated financial services industry, governments throughout the EU and in the euro area have intensified their coordination and cooperation, and the Eurogroup and the ECOFIN have developed guidelines and principles on the basis of which government should act in order to enhance the soundness and stability of our financial system, to protect savings, to avoid failures of systemically relevant institutions, and thus to restore confidence. At home, we have a saying, and the saying goes like this: if it does not kill you, it will make you stronger. Together with my colleagues at the Eurogroup and the European Council, I am determined to do whatever it takes to avoid that a series of adverse shocks kills us or kills our common ambition. As you can be sure that when all this is behind us, the euro area, for all its current troubles, will have grown stronger, more resilient, and more cohesive. Thank you.
Mr. Prime Minister, we thank you very much for your intervention. We know you have to go to your next responsibilities. I take some encouragement from the fact that before we met, you and Commissioner Almunia and some of your other European colleagues were meeting in the lobby, and you brushed me away by telling me you had a European policy meeting going on. So I was very encouraged by that, and we wish you the best of success in implementing all that as you now go about the rest of your very active daily schedule. Thank you for being with us.
Thank you. So, unfortunately, I have to go.
I will now introduce that one. Joaquín Almunia is very well known to all of you, I'm sure, and to us here at the Institute. He's been a member of the European Commission since 2004. He is the Commissioner for Economic and Monetary Affairs, both the leading policy maker and spokesman on economic policy for the Commission. He is, of course, a native of Spain. He was a member of the Spanish Parliament from almost 30 years ago, a minister in the government there from the early 1980s, holding several portfolios, led the Parliamentary Party and then the Spanish Socialist Party in the late 1990s, stood for Prime Minister in 2000, and has been a member of the Commission for 2004, from 2004. This is, I believe, his third speaking appearance here at the Institute. Mr. Commissioner, we welcome you and look forward to your words of wisdom on the euro and anything you care to add about the current situation. Mr. Almunia.
Thank you very much, Fred. Thank you very much to the Institute and to you personally. Thank you very much to Bruegel and to Jean Pisani, also for co-organizing this conference and for inviting me again to this room, to this institute, to discuss with you some aspects of the European monetary union, economic and monetary union. I was very happy when I knew that this annual conference, co-organized with Bruegel, was focusing on the 10th anniversary of the Economic and Monetary Union. In May 1998, the head of state and government, with the active participation of Jean-Claude Juncker, among others, decided to launch the third stage of the Economic and Monetary Union to create the euro and to introduce the euro in 11 member states 1st of January 1999. And when during the past months we prepared at the Commission a big report on what has happened during these first 10 years of the Economic and Monetary Union, when we analyzed which were the advantages and the difficulties of this bold decision of creating an Economic and Monetary Union, our assessment was, and is today, a very optimistic and positive assessment. The EMU, the Economic and Monetary Union, has been, during the first 10 years of its existence, a big success, has been a huge opportunity for the members of this EMU, right now 15, from 1st of January 2009, 16 members, to receive a kind of protection that provides more economic stability, less volatility in the exchange rate evolution for many of the members of the Economic and Monetary Union, lower interest rates, lower prices, better protection against external shocks, no barriers for increasing trade and investment flows among themselves, a very powerful European Central Bank that has done a very good job, as Jean-Claude Juncker said, during these first 10 years of its existence. And in the real economy, when we produced this analysis presented last May, in the real economy of the members of the euro area, they were also very good news. strong growth, growth above our potential in 2006, in 2007, huge improvements in the employment levels, the lowest unemployment rate during the last 15, 20 years. So things were very optimistic. We felt very optimistic, and we, in a prudent way, recognized a few months ago that not all the expectations that the EMU raised 10 years ago were fulfilled. That we have still a lot of work to do to reap all the benefits that we can reap from this political, economic and monetary project of sharing a single currency, sharing a single monetary policy, sharing a single monetary and economic space among us. But this 10th anniversary, before we can commemorate the 10th anniversary of the real introduction of the euro next 1st of January, is of course characterized by this deep crisis where we are in. So we need to assess how useful is the economic and monetary union against the backdrop of this very, very strong crisis in financial markets, and a crisis that is, of course, starting to hamper our real economies. Even with the information we are receiving today, this morning, yesterday, during the past week, we can say and we can argue that with the economic and monetary union we are in a better position than without an economic and monetary union. Without any doubt, we are better equipped to cope with the present situation because we have the economic and monetary union, and at the same time our arguments in the report EMU at 10 presented a few months ago, focusing on the need to work more in some areas, are now more evident. So the economic and monetary union is not a finished project, it's an unfinished project that should continue to be developed from the institutional point of view, from the point of view of the efficiency of the instruments, from the point of view of the common feelings of the participants about the common interests that are those that were behind the political decision to launch the economic and monetary union 10 years ago. Let me refer rapidly to the present crisis, and afterwards I will try to draw some conclusions both from the economic and monetary union and from the global level. This crisis, I will not describe it. Everybody knows this crisis pretty well, I think. Probably it's very difficult to say how we can solve the crisis, but why we have this crisis, I think has produced quite a big consensus at this stage. We have a deep problem of confidence among financial institutions, and parts of the financial market has collapsed. The European Central Bank, one core element of the economic and monetary union, was probably the first central bank to react the 9th of August 2007, providing liquidity very rapidly, and since then I think they have done a lot of things, a lot of good things to try to improve the liquidity conditions in the markets and to substitute to some extent the lack of functioning of the interbank market. And I think not only in the case of the central bank, the European Central Bank, in the case of the other central banks, they have demonstrated that they are ready to act in these difficult circumstances in the liquidity aspects. And every day they are trying to improve and to modify, to adapt their instruments to provide liquidity given the circumstances of the markets. The other day they have adopted an unprecedented decision, well, have one precedent after September 11th of a coordinated rate cut. And I think it's a very important step forward also. But with these two elements that should be commended of the actions of the central banks, providing liquidity, reacting in their monetary policy decisions to the present circumstances, these actions are not enough. And we are seeing yesterday and this morning how the markets have reacted to this. It's not enough. Risk aversion has reached unprecedented levels. Deleveraging has accelerated. Market sentiment has plummeted. And we need to do more. The US has adopted one very important initiative, the Paulson Plan, and we welcome this initiative. It's true that many people have discussed, and we can discuss also the instruments used, the priorities, the approaches within this plan, but the fact that the plan exists, the fact that the plan has been endorsed not only by the executive branch but also by the Congress, the fact that this plan has received a huge support from the point of view of the resources allocated for the implementation of its provisions is a positive, a very positive thing, and we welcome this initiative. At the European level, it's very difficult for us, and we are having the evidence that at EU level, even at the euro area level, it's very difficult to adopt similar decisions. I will not say the same decisions, but similar decisions that we have been discussing during the past days in the Paris summit last Saturday, in the Eurogroup ECOFIN meetings at the beginning of this week. To what extent is possible to agree at the European level or at the euro area level a common approach for recapitalizing banks? And it's not easy. It's not easy because one of the elements that characterizes our economic and monetary union is that the taxpayers continues to be national and that the budgets continues to be national. The EU budget is a very small one, 1% of the GDP, and is allocated for different objectives, policies and purposes. And to react to this situation, as some member states had reacted case by case or in a more global approaches, the EU, the Economic and Monetary Union, is not yet prepared. And this is one important lesson. But at the same time, we have to say that when the first case of a crisis in a cross-border financial institution in Europe, as was the case of Fortis, had emerged 2 weeks ago, several EU governments, including Luxembourg is one, by the way, the Belgian, the Dutch, the French, in the case of Fortis and Dexia, had been able to cooperate and to find a solution in real time. And this, I was the other day exchanging views with Jean-Claude Juncker, trying to draw some lessons, some conclusions. The kind of relationship, the kind of interrelations, the kind of common interest, the kind of personal connections, the kind of knowledge that we have because of the degree of our economic and financial integration and because of the fact that we share the common currency in the euro area has been a very positive element to help in real time these 3-4 governments to find the solution. To find the solution in the field of their responsibilities, together with the managers of the banks, together with the representatives of the shareholders, the supervisors, the European Central Bank and the national central banks of these countries. But it's more difficult. We have to recognize it's more difficult at the present stage of the economic and monetary union to adopt very quickly a systemic reaction, not a case-by-case solution, but a more global plan, a more global approach to deal with the present situation. And this is still work to do, and I hope this is a work that will be done in the coming days. I hope so. On Tuesday this week, we have a discussion at the ECOFIN level, the 27 members, not only the members of the Euro, but also the other 12 member states. And we were able to agree in a list of 7 or 8 principles on how to cope with a financial institution with systemic dimension and in difficulties. And this set of principles for recapitalizing these institutions or for other kind of actions needed to rescue this institution was agreed by unanimity, and at the same time the 27 member states, not only the euro area that had discussed the day before, but the 27 member states had also agreed in some concrete points, some concrete initiatives that are being developed during these days by the Commission through the correspondent legislative initiatives, regarding, well, not only the Capital Requirements Directive that was adopted the past week, but also some initiatives regarding accounting rules, so as to match in the European accounting rules and standards the decisions and the situation that has been created after the adoption of the Paulson Plan here. But at this, well, there were some agreements also in the minimum levels of the deposit guarantee schemes after a unilateral decision adopted by one member state, Ireland, that created very negative spillovers in some other member states. And we have learned from this bad experience of the consequences of the Irish decision how important it is to reinforce ex-ante consultations, even in these moments of stress, when governments need to react in real time, how important it is to establish ex-ante mechanisms of consultations to avoid negative spillovers and to comply with the rules of the European Treaty in terms of state aids and competition. And the Commission has promised last Tuesday, and is today or tomorrow, will publish guidelines on how we will give interpretation to these rules of the treaty regarding competition and state aids, to recognize the flexibility needed in a situation as the one we are living in, but at the same time to keep the treaty framework, the rules established in the treaty, alive, not to forget in these difficult moments the competition rules and the state aid rules. And the same is happening with the budgetary discipline rules, the Stability and Growth Pact. The Stability and Growth Pact, once we revised the pact in 2005 with the support and very good job from Jean-Claude Juncker as President of the Eurogroup, discussing our initiatives, the Stability and Growth Pact now has room for maneuver to cope with situations, exceptional situations, as we are now involved. We introduced flexibility, and we were criticized by many people because we were introducing flexibility for the difficult moments of the European economies, so as to strike a balance between the flexibility needed to have a fiscal policy that can compensate to some extent the lack of activity in other areas of the economy, in the private economy, so to have a counter-cyclical fiscal policy in the downturn, and at the same time preserving the rules, preserving the procedures, preserving the commitments with the budgetary discipline required for the good functioning of the economic and monetary union. And the same as has happened during the last 3 years, during the good times, during the recovery of the upswing, when after the revision of the pact, all the decisions regarding the implementation of the budgetary framework has been adopted by unanimity of the euro area members or of the 27 members of the European Union. Now we have confirmed last Monday at the Eurogroup level, Tuesday at the ECOFIN level, that the rules of the budgetary discipline should be respected. The Stability and Growth Pact continues to be our common framework for budgetary discipline, and at the same time that we should use the room for maneuver, the flexibility that was introduced in the pact in 2005 to cater with the situation that will put under strong pressure the public finances of some member states. At the same time, we are discussing, I will not elaborate on this, on the medium-term solutions, or medium-term initiatives to improve the functioning of the financial markets that were adopted last September, October, the so-called roadmap of the ECOFIN, a lot of initiatives on transparency, valuation of assets, risk management, coordination of supervisors, regulation of credit rating agencies, all these initiatives that had a medium-term perspective since the beginning are continued to be presented by the Commission or by other institutions, the supervisors, the ECB in some cases, are being discussed at the Council level with the European Parliament, and are the complement of these short-term solutions that we need to find, not only case by case, but at the global level in Europe. But it's not only Europe, and this is one of the elements that we raised in our EMU at 10 report. If the economy is global, if the markets are global, in particular if the financial markets are global, we don't need only European approaches, we don't need only euro area instruments, we need from Europe to contribute to the establishment of a global response. We need to promote and to cooperate in finding global solutions, and in particular with the US, and we need to find the way to establish a better governance at the global level. And this is, of course, beyond the European borders, but very important also for Europe and for the Economic and Monetary Union. We need urgently to think how the global governance of our financial markets, how the global governance of our economic, monetary and financial affairs should be improved. Many people is asking the same question: what Europe do to cope with this crisis? And we have to recognize that we need to improve our instruments and to improve our governance as soon as possible. But many people also ask what the multilateral financial institutions are doing, what the global financial authorities, leaders, responsibles are doing to cope with this very important crisis, and it's very difficult to answer this question in a positive way. Final comment: we are not only discussing the improvement in the functioning of the Economic and Monetary Union in the financial markets, in the financial dimension. Indeed, we talked in our proposals for the improvement of the next decade of the Economic and Monetary Union about governance, I refer to, about the international dimension of the euro area, of the Economic and Monetary Union, as a contribution to the improvement of the global financial governance, I talked to. We need to improve the quality of our budgetary surveillance. It's not only about the levels of the deficit or the levels of the debt, it's also about the quality of our public finances and about the sustainability over the medium to long term of our public finances, and is and will be extremely important to think about sustainability of our public finances with the new burden that this crisis will put on the budgets of our member states, and of our countries. We need to link macroeconomic policies with structural reforms that will need to help us to have a more dynamic economies and stronger economies able to cope with the consequences of this financial crisis. And indeed, we need in Europe, beyond the limits of the budgetary surveillance and beyond the remit of the monetary authorities or the financial authorities, we need to improve the coordination of our economic policies, because the adjustments that will take place in our economies to regain competitiveness, to regain dynamism, to regain levels of potential growth compatible with our aspirations will need a strong cooperation between member states. If not, we are at risk of assessing the second decade of the Economic and Monetary Union not as positively as we have assessed the first decade. Thank you very much.
Mr. Commissioner, thank you very much. The floor is open for questions and comments, but I'd like to start with one myself, if I could do that. You gave us a very rich explanation of the efforts now in the EU and Euroland to prepare to respond to the current crisis and to already deal with it. But I'd like to ask a little longer-term question that's the topic of today's conference. The topic of the conference is the euro the next global currency? Many people are saying that one result of the crisis will be a sharp devaluation of the American financial model, and that will adversely affect the long-term position of the dollar in international finance, as well as the United States in world economics and even politics. If that were true, the beneficiary in the competitive sense would clearly be Europe and the euro. But then that raises the question of whether the European response and the European model come out of the crisis looking any better than the American crisis response and the American model. So in that sense, whereas we must cooperate intensively, as you said, to get out of the crisis, in some sense there's also an element of competition to see who does better in responding, the U.S. or Europe, and what implications that might have for the future international roles of our two currencies, which are already, of course, the two key global currencies. Would you care to comment on that? It's admittedly early days yet in responding to the crisis and trying to come out of it, but how do you see that longer-term implication for the future of the global financial system and world economy in terms of the relations between the dollar and the euro?
Well, I don't know if indeed the question is extremely important. I don't know if this is the best week to answer these kind of questions because of the volatility of the markets, not because of the other reasons. No, I was referring in a very candid way to the insufficiency of the coordination mechanisms at the European level or the euro area level. To have a reserve currency at the global level, not the only one, but to share the role of a reserve currency at the global level, you don't need only to have sound financial institutions, good functioning financial markets, respectable European Central Bank, sound fiscal positions. I guess that we need, as Europeans, also better governance of our economic and monetary union. And I think if I can put on the table of the head of state and government of the euro area one thing around which they should concentrate political attention once this volatility of the market has been overcome, is this question of governance. Under stress, still some governments of the economic and monetary union, even with a very high degree of economic and monetary integration or financial integration, their instincts led them to react under national perspectives. And I think this is still, this signals that the economic and monetary union is not still completely mature from the point of view of the political ownership of the leaders of the economic and monetary union.
Okay, turn to my colleague Joan Pisani-Ferry.
Thank you, Fred. I want to push you just a bit further. In the report that you published and you referred to, the point was made, and I think very rightly, that not all problems are fiscal in nature in an economic and monetary union. And you were already going some way into signaling, emphasizing that we have to improve the governance beyond the SGP and beyond to surveillance of fiscal policies. And especially, I mean, what we're learning now is that we have the fair weather governance and governance in terms of crisis, in times of crisis. So what kind of provisions, beyond what you said about the need to move in the same direction, to coordinate, what kind of provisions, what kind of mechanisms, what kind of institution you think we need to draw the lessons of this crisis and to move ahead on governance?
Well, in terms of surveillance, or macroeconomic surveillance, we propose to broaden the scope of the surveillance beyond the limits of the fiscal policy, not only improving the quality of the fiscal surveillance, but broadening this surveillance and to discuss at the euro area level, at least at the euro area level, and hopefully also with the member states, members of the exchange rate mechanism that wants to become in the coming 4, 5, 6 years members of the euro area, to improve the surveillance and to strengthen the surveillance regarding the current account deficits, regarding evolution of competitiveness, regarding structural inflation, regarding functioning of some markets that are relevant for the quality and the speed of the adjustments within the economic and monetary union. If we are not able at the EMU level to improve the quality of the economic adjustments, and not only the fiscal adjustments, the divergences in terms of competitiveness within the economic and monetary union will put at risk the benefits of this EMU in some member states. And this will require to discuss at the euro area level, and if possible at the EU level also with the not yet members of the euro area, on policies, on economic policies that up until now belongs to the national competence. The wage policies, the systems of setting wages in the different countries, the reasons why the evolution of productivity is completely different in some members of the economic and monetary union, the lack of competition in some sectors protected against external competition, the evolution of the current account deficit and the external indebtedness of member states of the economic and monetary union are things extremely important. To really discuss this with a framework, I don't know if as credible as the Stability and Growth Pact, but going in this direction, to create a framework of discussion of these elements will require in the future improvements in the governance of the economic and monetary union. The Eurogroup, that plays a very important role, is an informal body that cannot adopt formal decisions today. This is the reality, and the Lisbon Treaty, that I hope will come into force in a few months. I hope my Ambassador Bruton will agree with me that the Lisbon Treaty will come into force in a few months. Will not change these elements. These elements will need to be discussed. But the economic situation that we will be facing after this financial crisis will require this kind of efforts, of political decisions, of priorities, in a more clear way than when we wrote this report 1 year ago or a few months ago.
We here at the Peterson Institute are very proud of our board of directors, and I want to note quickly that 3 of our board members are here and introduce them. Carla Hills, former Secretary of Housing and Urban Development, lots of other things, and U.S. Trade Representative. Leszek Balcerowicz, the key architect, of course, of the Polish economic reforms, Deputy Prime Minister, Governor of the Central Bank, and now a visiting fellow at the Institute for several months. And now I call on him for a question. Kajo Kochweser, the former State Secretary, Deputy Finance Minister in Germany, now High Executive at Deutsche Bank. Kajo.
Crises are always also a great learning experience, and I want to push Jean's point a bit further, Joaquin, in terms of what you think we have learned even in recent weeks in a very practical, immediate sense as to the role of and mechanisms to strengthen the role of the Commission in crisis management like what's going on now. While the ECB, in my book, has to receive high marks on crisis management, the performance of the Eurogroup and the ministers, for reasons you outlined, structural, political instincts, has been much to be left to be wished. In fact, it has been quite poor. And I hope you are right that in the next few days we will see Europe coming together better than in recently. I think the British package that is intelligently and put together and interlinked in its three components is about the way to go. I would even wish that the G7 today or tonight, every country is different, but basically it goes in that direction. And it would indeed be ironic if Gordon Brown, in the end, not being in the Euro group, becomes a bit of a leader in calling now for this coordination. But to be specific, what do you think? What have you learned already in terms of the role of the Commission in that and immediate mechanisms, not governance in the medium term, that would help here and now? We had the stability table of the EFC, we had many initiatives, but frankly, in the hour of need, some of this seems to be falling by the wayside.
Thank you very much, Caio. Well, before thinking in the role of the Commission, I would prefer to think in what the EU needs and what the Euro area needs, and afterwards to find the role that the Commission should play to come up with these solutions. What we need, many things. For instance, when we discussed in the past years scenarios, exercises around the hypothesis of crisis management in financial markets, in financial institutions, we as Commission, we always raise one question, among many others. We raise the question, well, we will need to discuss about burden sharing in an economic and monetary union where 40 or 45, close to 50 financial institutions based on one of these member states of the Economic and Monetary Union, or the EU at large, are cross-border, are operating in many countries, and if one day they have to be rescued and public money is needed, we will need to discuss this, how we can preempt this, how we can anticipate this, and which are the consequences of being obliged to go there, which are the institutional consequences, the political consequences, the policy consequences of this. It's not yet solved. I hope this will be solved. This will help. This will increase confidence in the present circumstances. Supervision. We have 15 banking supervisors in the euro area. We have 27 banking supervisors in the EU. They continue to operate mainly at the national level. Now, in the directive that we have sent to the Council and the Parliament 1 or 2 weeks ago, the Capital Requirements Directive, we anticipate the idea of a college of supervisors. That seems to be positively received by member states, but they discuss among them which is the role of the lead supervisor, of the home supervisor, how the host supervisors can be represented in the discussion on how to deal with the supervision of a cross-border financial institution. It's not enough. The present level of the discussion is not enough according to the evidence of what we are living now. So 2 days ago in the parliamentary discussion, the President of the Commission announced that we will launch a high-level group of experts to think on
the needs to have European levels of financial supervision. And Jacques de la Rosière has been charged to chair this high-level group. And this will link to some extent with the relationship between the banking supervisors and the ECB at the euro area level. That is also needed. We need to improve the way the common interests are discussed at the economic, at the financial level in our institutions, or in the Eurogroup, or in the ECOFIN. Again, the national interests are still the most important ones, because the taxpayers are national, because the budget are national, the governments are accountable before their national parliament. But we have a lot of things in common, a lot of common interest that requires a better governance, that requires better instruments at the European level, that requires stronger responsibilities at the European level. And in this regard, without asking for any particular competence, the role of the Commission is, I think, is extremely useful. 10 days ago, 15 days ago, 20 days ago, many people was writing or thinking in how to cope with this situation. Reading these thoughts on these papers 15 or 20 days later, I can tell you, and in private I can give you some details, that the papers and the ideas put forward by the Commission are still there. Other ideas, other reactions, other priorities, other attitudes have not survived 1 week. Why? Because we are not linked with a partial vision. And this is a huge advantage of our institutional architecture and of our decision-making process in the beginning of the European Union more than 50 years ago. But in these moments, this role in this area that traditionally has been preserved from the community method in many areas, now I think requires a second lecture. Or
Okay, we have 3 questions from the floor. We're running close to the end of this session, so I'm going to ask those 3 questions to be asked together, and then I'll ask the Commissioner to respond to them as a group. What is that? So back there, right here, and then back here. Yeah. And go to the microphone and introduce yourself, or the traveling mic will come to you.
Okay. Fran Burwell from the Atlantic Council. One of the political weaknesses of the euro over the long term, it seems to me, has been the lack of British involvement. And now Kaio mentioned the British package and the irony of it possibly being one of the solutions. So I have 2 questions for you. First off, do you agree with the premise of this question, that the euro over the long term cannot really be a truly global currency if one of the major member states is not involved? And do you think that what is going on now, the discussions going on now, and the financial crisis will make British reservations about the euro steeper, or will it make clear that everyone is in the same basket and has to work closer together? Thank you.
Oh, sorry.
Go ahead.
Yeah, I thought there was an answer. I just wanted to ask you something.
You identify?
Mario Calvo Platero, US editor for Il Sole 24 Ore. You just mentioned that the idea is to still behave as much as possible within the constraints of the Stability Pact and within some of the constraints of competition. Now, the markets these days would expect a larger deal of flexibility than those directives are expressing. So can you tell us if these days the Commission is ready to forget completely about those directives, even temporarily, and be extremely flexible if needed? Thank you.
Okay. No, sorry, the next question is from up here. Yeah, yeah.
Yes, David Marsh from London. I won't comment on the first question. I did want to ask about the question of supervision. I think the Commission was quite right in addressing this balance in a certain medium term. Is there not something we could do more easily using the Maastricht Treaty to ask the ECB to take over responsibility, or at least to increase its responsibilities in the supervision of, say, 20 large EU money centre banks, and maybe redeploy some of that immense brain power we have in Frankfurt, not so much to worry about inflation, but to worry about stability of the financial system?
Okay, one more question, and then back to the Commissioner to respond.
Christian Kopfert, Spinnaker Capital. Commissioner Almunia, it's becoming clear that one of the solutions to the current crisis entails a recapitalization of the European banks. Now, the schemes that have been proposed so far, including the British solution, entail a voluntary recapitalization of the banks. That means that only weak banks will participate. This has two negative consequences. The first one is that the strong banks will try to avoid participating by shrinking their balance sheet. And we've just seen a very large institution, national champion, increase its Tier 1 ratio to 10%, not by increasing equity, but by reducing its balance sheet. That has negative consequences on aggregate demand. And the second consequence of a voluntary scheme is that you have continuous insecurity in the ability of the financial system to cope with the current crisis, and the property rights of existing and future shareholders are unsure, which will make it more difficult for them to, inject equity on a voluntary basis. So is the Commission considering, I think that in the current crisis a certain finality in the public intervention is needed. Is the Commission also considering to make injection of recapitalization of banks compulsory? Thank you.
Okay, Mr. Commissioner, and maybe some of those questions also will apply to our future speakers.
The UK and the Euro, I would be very happy if the UK decides to join the Euro. It's true that for the Euro area to have the City of London outside our borders is not a good thing. But looking ahead with a medium-term perspective, I think that the question should be addressed in the opposite sense. For how long the UK can stay outside? I think this is a real question over the medium term. Second, rules and flexibility. The rules of the treaty regarding state aids in difficult economic circumstances, and the rules of the treaty and of the Stability and Growth Pact regarding budgetary discipline in special or exceptional circumstances, that both concepts are in the Stability and Growth Pact with a particular meaning, each one of them, I think is an adequate degree of flexibility. We are flexible and we will be flexible, sticking to the rules. We will not ignore or abandon the rules. This should be clear. And when I hear some voices today asking for the ignorance of the rules or the derogation of the rules, a temporary derogation of the rules, I remember some voices who said 1 year ago that the financial system was over-regulated, that the self-regulation or the no-regulation was the best solution. And I don't think so, neither for the functioning of the financial markets, nor for the budgetary framework of our economic and monetary union, nor for the competition purposes that are of the essence of an internal market. Without competition rules, without the stated rules, we will not preserve our internal market. Without budgetary discipline rules and frameworks, we will not reap benefits for an economic and monetary union. Without some rules, some regulations, not only better, but in some cases larger regulations, we will not fix the situation of the financial markets. Regarding the supervision, I think is needed a EU level of supervision for the EU level financial institutions. If this supervision is integrated or not in the ECB is an open question. As you know, some European countries had the banking supervision within their national central bank. This is the case of my own country. In some other cases, all the financial supervision activities are integrated in one agency, as the British model or others. And in the case of the ECB, there is no formal demand coming from Frankfurt to attract these activities. There is a real demand, and I think with many arguments behind this demand, to have the information required to have a good monetary policy decisions and the good management of liquidity. Whatever will be the future model of the EU supervisory levels, the ECB should be associated from the point of view of the links between the financial supervision and the monetary authority. And the question of recapitalization, we have not a model, a commission model to recapitalize banks. We are convinced that one initiative at the European level regarding recapitalization is needed. I said so to member states that in the past days were reluctant to this. I think this recapitalization is needed in the case of financial institutions with systemic dimension. The provisions, the details, the conditions are not still worked out, at least at our level.
Mr. Commissioner, thank you very much for informing us so effectively and so comprehensively. We wish you the best of success in achieving all of those objectives you set out and further enhancing Europe's contribution to resolution of the current crisis and supporting the stability of the world economy in the longer run. Thank you very, very much.
Thank you very much, Fred. Thank you.